Let's start with Mustek, the cautionary out from that company. And it looks as though we could see a management buyout unfolding on this front. First of all, take us through the action on the share price today, going from around about 380 when the deal was announced to what, 550?
Finished just short of 550. This is a share that we've held for quite some time. It's a beautiful little share for a value investor. It's quite a small share. It's got a market cap of about 400 million. It's got 260 million cash on the balance sheet, so it's very attractive from that point of view. And it's what we would actually call a Benjamin Graham net. And by that you mean if you take the current assets, subtract all the liabilities, it's still bigger. The net current assets are still bigger than the market cap. So this is very, very attractive for us. We're not surprised to see this sort of action within Mustek and the IT sector as a whole.
You say you've held it for a long time. What are we talking about? A couple of years, a couple of months?
No, not a couple of years. Longer than a couple of months, though. About a year and a half. We don't hold it across all our portfolios. Obviously, it's a very small share, hard to trade. But this is the beauty of being a small manager. You can shop in those sort of spaces in the smaller or micro caps, if you like. But yeah, we don't hold it across all our portfolios, only in a few selected.
An article in the Business Day today quoting your CIO, Adrian Saville, and his comments around weakening the rand. I know he's specifically outspoken on this front. Can you take us through the thinking and the rationale behind what he said in the article?
Yeah, everyone seems to be, from labour unions to government to the private sector, thinks that a weaker rand is going to increase our manufacturing output. We believe that this is going to be a short-term solution. If you look, in theory, it should increase our competitiveness. However, if you actually look at the facts, in reality, it hasn't happened in the past. If anything, there's actually a slightly negative relationship between a depreciating rand and output. So in other words, an appreciating rand, you do tend to see slightly increase in output, manufacturing output. We believe that's due to a buoyant economy. When the global economy is buoyant, South Africa participates in this. People demand our goods or demand our exports, and along with this they become less risk averse and therefore wanting more exposure to emerging markets and hence increasing the exchange rate.
Another big story on the day is that RMB Holdings is to list its insurance unit, and that's a continuation of the broad restructuring that's taking place within the group. We've also got, obviously, Royal Bafokeng Holdings now looking to take a 5% stake in the listed entity. Your thoughts on this front?
That's correct. Yeah, it's first rand. They've been doing this for some time now, unbundling their assets. I think they want to concentrate on banking, which they're supposed to be concentrating on, sort of Discovery, Momentum, now Outsurance. I think this will be a nice listing. In the short-term insurance sector, there's only really Santam. That's basically your only option in that subsector. There is Zurich, but it's very illiquid. And these are generally very high cash-generative companies. Unless there's a total catastrophe, they generally pay nice dividends. So it will be nice to see an additional company in that sector.
So net positive, you believe?
Yes, we believe net positive, yeah.
BCX Business Connection, just having spoken to Benjamin and Dean, what do you make of the fact that they have said that they're going to continue on this acquisition trail, that size does matter in the services space, in the IT environment? It's tantamount to their growth on the African continent. Do you like the nature of the transaction? Do you like the acquisitive nature that BCX is taking on at the moment?
Yes, I think so. You see the IT sector at the moment is very much unloved, and I think that's due to a lot of the companies are very small, micro-cap companies. They don't have that mass behind them. And at the moment, the markets are really enjoying your story stocks, your bigger stocks, your ShopRites, and the companies that are moving into Africa, like BCX is doing. So, yeah, I think, again,
let's talk about the IT sector, because again, just going back to one of the tenets of Canon going forward, you're looking for IT and construction as we move into 2011, staying away from the retailers and healthcare. Within IT, what are you looking at? What stocks in particular
at the
do you
moment,
fancy?
Mustek was one that I just mentioned. We don't hold that across all the portfolios. Kajima is another one. That's a small cap that's been in the news.
No resolution on that department.
Still no resolution there. That's the Whoema online dispute. We haven't heard anything about that yet. So that's pushed that price a lot lower. I mean, that trades on a P of about 4. Pinnacle Technologies is another one. The distributor of hardware. They just recently made an acquisition, Active. They paid about 180 million or 170 million, sorry, for NAV of 180 million. It has an ROE of about 25, and we believe that acquisition will enhance that ROE. So from that point, that's very
Nothing
positive.
in the bigger cap environment, like a data tech.
We also, then I was getting there. Data Tech's the one big cap that we do hold. We're actually getting rid of it now after our data. We saw Data Tech share price grow on the back of that deal. And
So you're capitalizing on the rally you've seen in the share price in
we
Data
think
Tech.
it's looking fully priced at the moment, so we're actually busy selling out of Data Tech. Datacentrics is another IT company that we hold. So we are overweight the sector, but as I just said, there's a lot of small caps. They're unloved at the moment. We love them.
Looking at construction, Avenge is one of those that you hold.
Yeah, Avenge is still, we've held this one since the beginning of the year. Very similar to RT, it's an unloved sector. Everyone thinks 3 years ago construction companies were just going to continue to grow forever and ever. And now after the World Cup, everyone thinks construction companies are dead. We've seen them trading on very attractive multiples. Avenge in particular, it's about a 16 billion market cap, and they've got about 8 billion free cash on the balance sheet. They've announced a share buyback of about R1 billion. They've got a global footprint. About 50% of their earnings come from abroad. So from our perspective, there's absolutely nothing wrong with the company.
And then if your stance is to stay away from healthcare and retail, would you go as far as to say that people should potentially get out of those positions, take their money and run specifically in retail? Or across the board, look at Aspen that has run so hard.
I suppose it depends on your investment philosophy here. If you look at Massmart's been brought on a P of about 25 from Walmart. That's very, very rich for us, but obviously they like it. A lot of these companies moving into Africa, everyone likes the story behind it. They think they're going to continue to grow forever and ever. But for us, we wouldn't go near ShopRite and Naspers